Alright traders, I am back again with another video, and today we're going to look at how to make money trading Forex and cryptos with Ichimoku. Alright, so traders, you can make money in the Forex market using Ichimoku, and you can also make money in the cryptocurrency market trading Ichimoku. You can make you can make money in any market trading Ichimoku, but we're going to focus today on those two markets, Forex and cryptos. And you also can do the same thing with stocks. Okay, so I'm going to explain two strategies to you today that are going to help you to really get your trading with Ichimoku in tap. All right, so let's move on. We're going to talk about Ichimoku, and we're going to discuss the 5 lines of Ichimoku. Okay, so first you have your Tenkan-sen, which is your conversion line, and it's calculated as the highest high plus the lowest low divided by 2 for the past 9 periods. All right, so the green line where the arrow is pointing is your Tenkan-sen line. Then we have your Kijun-sen, which is your standard line, and it is calculated as the highest high plus the lowest low divided by 2 for the past 26 periods. We have your Chiku span, which is your lagging line, and it's in the very important line. It's calculated as your current price time shifted backwards 26 periods. So wherever you see price right here, if you look 26 periods back, 26 candles back, that will be exactly where Chiku span will be, and it has vital meaning to it. And then guys, you have your Cinco span A, which is calculated as your Tenkan-sen plus your Kijun-sen divided by 2 and then plotted 26 periods ahead. Okay? And the Cinco span A is showing here where this line is, this upper line. Now this line is up on top in an uptrend. In a downtrend, this line crosses this line and you have a Kumo twist, and then you have this line on the bottom. It will not be on top of the cloud. It will be on the bottom of the cloud at that point. As you can see, Cinco span B, which is calculated as the highest high plus the lowest low for the past 52 periods divided by 2 and then plotted 26 periods ahead. You don't need to know these calculations right off the bat or really know much about it. You just need to understand the lines and how they work. Alright, so basically this is Cinco span B right here where the arrow is pointing on the bottom. In an uptrend, it's on the bottom, and then when the market is in a downtrend, this span A crosses span B and it'll be on the upper side at that point. Alright, so now let's discuss some of the Ichimoku trading strategies. Alright, so we're going to look at the strategies that I pretty much use and know. Actually, I don't use all of these strategies, but I teach all of these strategies. I don't feel like you need to trade all of these strategies, because then you're going to miss out on trades because you're focusing on too many strategies. So what I suggest doing is basically learning 2 or 3 of these strategies and understanding them better. But today we're going to talk about the Tenkan-sen bounce strategy and your Kijun-sen bounce strategy. So you could see you got a Tenkan-sen cross strategy. So you got a Tenkan-sen Kijun-sen cross strategy, your Tenkan-sen bounce strategy, your Tenkan-sen break strategy, your Kijun-sen bounce strategy, your Kijun-sen break strategy, your Kumo bounce strategy, where the market will bounce on the bottom or the top of the cloud, your Kumo breakout strategy, your Kumo twist strategy, the Chico span breakout strategy, your Chico span bounce strategy, your C-clamp trade strategy, and a Kumo formation trade. Alright, so we're not going to discuss all of those today because I cannot do that in one day. Alright, what I'm going to be discussing are the trades that I told you, the Tenkan-sen bounce trade strategy, as you could see developing right here, and then your Kijun-sen bounce strategy, as you can see right here. All right, so I can't teach all of those strategies to you in one session, but If you want to learn all those strategies and how to become even more proficient with Ichimoku and how to make better trades with your trading, then visit my website, which is www.fxatOneglance.com. And at this current time, guys, I am still offering the lifetime membership to you guys. All right, just because traders asked me not to let it go yet, and I'm not going to let it go at this point. So what it is a lifetime membership. Basically, you pay this one-time fee. As you can see, it's a one-time payment of $250. Yep, $250, and then you get a lifetime membership to my website. All right, so you can access everything on my website all the time, anytime, and that's for just $250, as I said. And what are you going to get with that? You'll get online courses, educational videos, webinars, market analysis, trade alerts, chat room, forum, and a trading plan. And then what you'll learn is more than what you're going to see here. Ichimoku, price action. You're also going to learn support and resistance and the almighty fractals. Fractals are a main component of my trading. So my online courses, with those courses, you're going to learn the basic Ichimoku course, okay? You're going to learn the Ichimoku Advanced Japanese Techniques course. In that course, you're going to learn your time analysis, all right? And then you're going to also learn your wave analysis. And then you're going to learn your observation theory. The observation theory is used to really find your targets pretty much, okay? And then I have another course, which is a fractal course, all right? Then we have a high probability price action trading course. And then we also have a stock market foundational course, which has not been put out yet, but it's pretty much ready and done, just touching up a few things. But also in this course, it's going to teach you a lot of stuff about trading the stock market, not just Ichimoku. This is a real stock market foundational course. It's going to help you to understand balance sheets, everything to that nature. All right, so you'll be able to learn a lot with this course. So if you're interested in all these things that I'm showing you now and today, and the trade setups that I'm getting ready to show you, and want to learn even more, again, visit my website, and then I'll be able to help you from there. Trust me, I know that you will improve what you're trading, because Ichimoku is going to help you to become more disciplined and follow rules. All right, so when I'm trading, I trade what is called level, signal, trigger, LST we call it. So we'll discuss that a little bit in the trade setups that we're getting ready to talk about, the trading strategies. All right, so let's get on and introduce to you the Tenkan-sen bounce trade strategy. All right, guys, so first of all, let's look at just how well the market follows, how well Ichimoku follows the market. Ichimoku follows this crypto market, which is your Bitcoin US dollar, really well, as you can see, and I'm using the default settings. So these two lines, if you notice, the green and the blue, the market never really violates these lines in a uptrend. So with that said, there should be a way for us to profit from that. So that's what I'm going to show you how to do. Profit from this uptrend or downtrend, where you notice that the market rarely ever violates this unless you're going to see the market probably change direction. Okay, now this is a trend based strategy. All right, both of these strategies are trend based. So at times you will have issues when the market is like this, pretty much flat. Now you could see the flat Kijun-sen, which is a good sign, and Tenkan-sen. At times when the market was doing nothing, Tenkan-sen was flat right there and Kijun-sen was flat right there. All right, and then you had a TK cross right here, and then you had a couple bounces on Tenkan-sen, and the market never really went anywhere, but it was still pretty flat before finally, again, really flat here. You're not going to trade anything that's when Tenkan-sen or Kijun-sen are together like that. You don't want to really trade, but then you get this move. So when you get annulation like this, annulation is very important with these two lines. That shows you the momentum, that you're having momentum take off for you. And then you see the TK crossover. Once you get that TK crossover, you're going to trade the direction of the TK crossover. And I'm going to explain it all for you. So you're going to trade the direction where the Tenkan-sen crosses the Kijun-sen. So where this Tenkan-sen crossed the Kijun-sen from below to above, that's a bullish sign. You're going to trade the market to the upside at that point. So you're going to follow the direction of your TK crossover. And then you can see how well the market just follows this system here with Ichimoku. Okay? Follows it very well. And we're going to use that to our advantage. So looking here at Dash Bitcoin, you could see just how well this follows the market. And the market never really violates this, and it's a big downtrend, and that would really help you with your trading. Then it gets crossovers here. Now here's where you're having some issues. You had a crossover and then probably took a trade in here that might not have worked out for you. But then you had another TK crossover right here where the greens drop. So now you're going to be looking for bearish opportunities, and you can see where the market bounces off of these levels. All right. And then you can see where we probably have a little bit of trouble in here. Then the market's spiky but still has a little bit of bounces. Then you're flat here. It's hard to trade a lot of this stuff right here. But other than the Tenkan-sen bounce, you would have your Kijun-sen bounces, which would be very good in this area with a flat Kijun-sen, then a bullish crossover, and then you can see the market take over. So we're going to go through some of these trades. We're going to go through them and we're going to go back test them. We're going to look at them from the backwards, going backwards. But you can see again, nice bounces. Now we broke here and we had a crossover to the upside, but price never went to the upside. You had a TK crossover that was bullish, but price never closed above the crossover. So you never really had an issue. I mean, the price never closed above your Tenkan-sen, right? So you never had an issue. Price should be above or below Tenkan-sen. Then you had a TK crossover that was bearish right there. And then you had your trade opportunity right there, and another one right here, and another one right here, and a possible trade right here. Now we may be finding a bottom at this point, but still you're going to take these trades. And what's going to be the issue, I'm going to show you as we go back test this thing. The issue is taking these trades when you see the market at this level. Okay, because if I go backwards, so let's look at this for a minute. I'm just going to go backwards here and show you something really quickly, why you're going to probably get confused with it. So when you're looking at this market and you see the market touch Tenkan-sen, this is when you're going to start getting interested in your trade. All right, when that market touches Tenkan-sen, you're interested in that trade. All right, so there was a couple things that happened here. So in my price action course, I'm going to teach you all the price action entries to enter this market. But there's a couple things that we looked at here. Basically, you could see a rejection of Tenkan-sen right here. Good signal. And also this candle with these two candles together, this was an outside bar. All right, higher high than this previous high, lower low than the previous low. This bar is inside, this bar is outside. Good sign. You take your entry at that point, all right, and trade to the downside. You're following this crossover right here, which is bearish, and you're going to continue to trade to the downside until you get a crossover. So trusting the system and trusting what you see is going to be the biggest thing. Once you see that happen right there, you should start paying attention to this pair. So you can glance through this thing. If you're looking at this right here and price hasn't touched this level, you're probably not too worried about taking a trade at this point. You don't even have to really worry. But up in here, price came up into this level. Now you're inside this TK zone here. So when you're inside the TK zone, you're looking for a trade again, because really you have resistance in two spots. The market comes up to resistance, which is your Tenkan-sen, then comes up to resistance, which is your Kijun-sen, not to mention the cloud right here. All right, and then you could see if you trade the direction of the crossover, which is a bearish crossover right here. All right, you got a price action signal and an entry. You could trade that thing to the bottom. Basically, also you could go to the 4-hour time frame and get a better entry once price is inside your TK zone. Inside the TK zone is where you're going to look for trades also. All right, because sometimes the market's not going to just come right to this level like this and bounce. It's going to come inside your zone, and then you're going to look for it to come outside of your zone. and then you're going to trade. So let's look at this thing in back testing mode. All right, so let's go to the replay mode and look at some of these trades, and we'll discuss how to trade the TK crossover, and then we'll discuss how to trade the Kijun-sen. I'm sorry, not the TK crossover. We'll discuss how to trade the Tenkan-sen bounce, and then we'll discuss how to trade the Kijun-sen bounce. Pretty much the exact same way. All right, but we'll discuss them both. All right, traders, so let's start looking at this Tenkan-sen bounce trade opportunity while we put it in replay mode. Okay, so basically, we're going to just start from here. But if you look here, you had a bearish crossover. So your Tenkan-sen crossed below Kijun-sen. Now you're going to look for short opportunities. So the market came right back here. This would have been hard for you to catch, really. Been hard for me a little bit, but you could see, you'd have to see this in real time, and the market touches Tenkan-sen right here and then drops a little bit. Then you have a big candle that takes you out probably, but you may not even catch this trade, all right, because it's probably hard to catch this one. The market's a little jacked up. But then the market does give you an opportunity down here that I didn't take notice of, but I see that opportunity because we're touching. As soon as you touch, you want to take notice, and that's when you're going to start taking your trade. Now you would have got a signal here because first of all, you got a bearish engulfing. So you take your entry here, and then you would have lost this trade. This would have been a losing trade for you. But then we have the market pull right back up to Kijun-sen, and you have a Kijun-sen bounce trade, and we'll discuss that later. And you did make profit on this one. All right, and then really you had a bounce here. Now this bounce did not give you an entry. All right, so you didn't get an entry because this is an inside bar, and the market is inside of this bar here, and then by the time it breaks out a little bit, you're in a flat market there, so you pretty much don't get an opportunity to trade there. And then when I'm looking at the market here, you can see where it starts to take off. Now this angulation is very serious, and when we see angulation, we want to be on board with angulation, okay? But the thing is, you wouldn't have caught this with a Tenkan-sen bounce. So there's other trades that we trade to catch this, and not necessarily all Ichimoku trades. We trade a lot of fractal trades, and fractal trades are very, very important. That's one of my top trades. So guys, I trade 3 trades. My first trade I'm looking for is fractal trades. I have different fractal trades that we take, and then I'm looking for Tenkan-sen bounce and Kijun-sen bounce. Basically, that's all I'm looking for when I trade Ichimoku. Once in a while, I'll take a TK crossover trade, depending on how close it is to the market. Like this one is super close to the market. I don't have a big stop loss, so I could take that. Because you know the 10 candle rule after the TK crossover, right? That's why I don't take TK crossovers. And then the next thing is, I take here and there Kumo breakouts, but a lot of times the market's extended on breakouts, so I don't really take those. So here we're going to go and start to see what the market does here. We're going to look for trading opportunities here. All right. So Tenkan-sen and Kijun-sen were flat at this point. Then you see Tenkan-sen moving to the upside a little bit. Right there, you're going to look for a trading opportunity. All right. So now you're going to want to put an entry at this point. That candle closed. You want to put an entry above with a stop loss below this level. Now we could play the stop loss with the fractal levels also. All right, but we're going to play the Kijun-sen at that point. All right, so that's what you would look for there. Let's see what the market does for us. So the market gave us some profit, pretty decent profit a little bit. Then the market comes back. You got a flat Kijun-sen and you're inside Tenkan-sen, Kijun-sen with both of them flat. You have no momentum at this point. All right, so now you're watching. And now you got below this level. So we don't want to bounce off of the bottom. We want to bounce off of the top. So this bottom bounce is no good for us. But now it looks like we're getting a crossover. So the market is getting ready to give us a crossover, I think. So let's see. So we got a crossover. And then the market was ugly there. I don't know what it was doing right here. Now it came up and gave us another opportunity right here. All right, because we touched. Kijun-sen. Now let's see if we get an entry. Now see, I can't really play this because the candles are too big. For me to find my entry, it has to be lower than this point pretty much. So it probably wouldn't be an opportunity there unless I go to the 4-hour time frame, but I'm not going to do that on here. And then you can see that didn't work, and then the market went to the upside. We had angulation, but we still didn't have a crossover. So if we didn't have that crossover, there's no need for us to even take a trade at that point. So we didn't get this trade here, so we're still looking for a trade opportunity. Now, you had a bounce right here that was on your Tenkan-sen. So when you had that Tenkan-sen bounce, I pretty much go to my 4-hour time frame to get a better entry, but I'm going to stay on the daily because we're here. And I want to enter the market at this point. I don't want to take higher risk. This is more aggressive. This is more conservative, which gives me more risk because look how deep it is. And I really like to be below this level, but at least below the candle that started the entry. All right, so a lot of price action entries you'll learn also from my courses. So then you could see we had a bounce right there. Market didn't actually, yeah, we would have got triggered probably and lost that trade. So now we let this market go. And there's other trades you could have took in here. Because you see, this is actually a Kijun-sen bounce trade. Pretty good trade opportunity. As you look at this, we're bouncing right on Kijun-sen. But I want to discuss that by itself. What an entry at this point. We would have had a good trade. You know you're kind of flat here, so you would have been watching out for this to see if the market could break it. Now you really want to see the market close above that level, and then you know you might be seeing some momentum here. All right, and then also I'm going to show you a couple other things with Williams percent R, how to take these trades. Okay, so we'll add Williams percent R after we just look at these without Williams percent R, because you don't need Williams percent R to trade, but it could help you. So we're going to discuss that. So you could see Kijun-sen bounce would have gave you some trade, some good profit. Then the market takes off on us, boy. Whoa, it takes off. You get a good trade off of that level. You bounced on Kijun-sen here pretty much, it looks like. Again, candle's so big, I'm probably not going to get an opportunity unless I go to 4-hour time frame. So not on the daily time frame am I looking for anything here. And now I'm not looking for a bounce there. Couple other trade opportunities you have right here. So let's just follow this thing. So you're probably like, I'm not getting a lot of opportunities. When the market's trending, you'll get a lot of opportunities. Now I'm watching because we pretty much came close right here. All right. Now, just because we're not getting opportunities everywhere, you can't trade everything all the time. Go to another asset because there's more than just one, but also there's other trade setups that you can follow. All right, so this is just your Tenkan-sen trade. And we didn't bounce on that level pretty much yet. Now we did. So we touched here. So I'm going to look to see if I can get an entry. I'm thinking right here at this level. Now I could be a little bit more aggressive right here, but I don't really want to. I'll go to the 4-hour time frame to be aggressive. I won't go entry 4-hour daily here. I'll go 4-hour to make sure price action is right. If I stay daily, I'm going to go here. You got a crossover that's bearish, so you want to trade to the downside. Your future just turned dark. Chico span still above price here. You want to see that break below, but our main signal is right there. All right. So let's see what the next candle gives us before we really decide. If that next candle, so I pretty much will box this in, but the 4-hour would give me a better entry than I'm going to get on the daily. That's why every time I touch my level, wherever I'm playing levels, I'll go right to the 4-hour, because like even back here, when you hit this level right here, you could have even probably got a better entry off of your 4-hour time frame. All right, I follow the daily bias and take a 4-hour entry, But now you can see we bounced here. So if we play this aggressive, we're going to trade right here. All right. If we're aggressive with it, we're going to have a stop loss above this fractal level right here. All right. That's where we would really want our trade to be set up. So let's see where we go. So we would have been triggered aggressive trade. If we're not trading aggressive, then we wait for this level. Now we would be trading right into support here, which is some support, and we would be cautious of that. But if I take an entry there, I'm in the market already. If I'm going to take an entry here, then the candle has to go through that level, and I would be taking this trade aggressively at support with a stop loss above that candle. So I'm still looking at taking that trade. All right. And the market gives us a good candle, a good move. So you can see now we didn't have some opportunities in the past, and that's when you go to another asset. But we had a couple opportunities here. Now we want to look for the bounce here. We touch. As soon as we touch, we're starting to look. Now, one thing you want to be aware of, watch for your bottoms, okay? You want to see if you're getting support and resistance at these bottoms. Really, I would look at a bottom like this. This is not all the way a bottom, but it's a support level where the market could turn, all right? Because this could just be a move to the upside, correction, and then move back to the upside. That's what it could be. I'm not sure what it is, but I watch out for that. And the reason I'm telling you this is because one thing that I always look at is this flat cloud. When I get a flat cloud like this with a flat cloud up top, no, not the flat cloud, sorry, the thick cloud, and then it's flat, and then when you watch this, you'll start to see it roll over. And once it starts rolling over, you're getting that crossover. That thick cloud stays flat, it crosses over, and then you go. All right. Because basically what you're seeing here, the span B will flatten out, and you'll get a chance to trade based off of seeing this formation that you're going to see. That's why I will look at this down here. And also if I get a big C clamp. Now this isn't a big C clamp. It's not even a real big clamp at all. It's not even a clamp. So you want to watch out for those things. But we're still looking at our trade because we're following the direction of the market. We're going to lose some trades, but we have to lose some trades when the market's going to change direction on us. So from going from downtrend to uptrend, we're going to lose some trades. We're going to short this thing right here. We're going to put our entry at this point now because we got to bounce pretty much. We're going to enter at that point. That's where we want to enter. We'll put a stop loss here, a little bit above this level here. Really in Ichimoku you're supposed to be this far, but that's really far. I noticed that barely can I take stop losses with Kijun-sen unless I'm really looking to be long-term trading. You know what I mean? But this, what I'm telling you here, works on all time frames. But I prefer the 4 and the daily, and I think there are more consistent markets where you're going to see this stuff. So we got to bounce off of this level, and the market drops a little bit. Another bounce there, but we're not going to look at that because we're already in the trade. Now you got to bounce here where it touched the market. Where it touched and came down, you got a bearish crossover. A bearish engulfing. I'm sorry. You got a bearish engulfing trade opportunity right here. Yes, it's a deep market already because you got this deep candle that fell so far, but you broke some very important levels here. All right, so I would take this trade, and I'm going to show you some other things. So let's go back. Actually, not let's go back, but let's look at this. We can't really see here. All right, so let's take this trade. And this trade gave us a good profit. Good profit on this trade. Now here's another bounce, but I wouldn't have taken this trade because it's way too far. By the time the candle closed, we're way too deep. Big stop loss. I definitely don't take that one. Now I'm looking at this right here. Another bounce. out, because see now it bounced and closed right at this level. The next candle here is going to be important. That will determine what we do. So let's look at the next candle. And I'm going to put an entry at this point. I got massive rejection here. All right, but again, my cloud is getting thick. Now it hasn't rolled over yet, but when you find that bottom, it's going to start to roll over. So let me show you what I worry about a lot. And this is the lowest that this thing's been. Actually, no, sorry. No, I didn't look far enough back. When I start to see a level like that's really a significant flat level in the past where the market may be coming down to, this level's way back here, and it could be coming down to that point, but that's when I start really paying hard attention to these thick fat clouds, especially at support levels. All right, but I'm going to take an entry at this level right here. So this is where we want to enter the market. We'll put a stop loss above that level, and then we definitely want to shoot for this target, and then we want to get through that target more than likely. Don't like that. We're out. We're stopped out. So now the market looks like it's changing direction. You can see what I'm talking about with these clouds. See this flat cloud? And then it's starting to roll over here. Starting to roll over. You're getting a change of direction a little bit with the market when you see those flat clouds and it starts to roll over. Not the flat cloud. I'm sorry, I keep saying flat cloud. The flat cloud is important. The flat level here. Whoops. But what's more important is the thickness of it. It's so thick and it starts to roll over. You kind of know you're finding a bottom there, but this was a really good rejection. Still got stopped out on that trade. So then you would just start looking now. Still looking for. Now we're not going to get a bounce for quite a while. To the downside anyway. Now you got a bullish crossover. So now you're going to look for bullish bounces. You're not going to get a Tenkan-sen bounce here for a little bit because the market's below your Tenkan-sen, so you can't get that bounce. Then the market's giving us absolutely nothing at this point. Yeah, nothing happening. Now there's some other ways to trade this. Here's a TK crossover trade, quite possibly. The market's trying to change direction, I guess. We had a nice bounce here. I didn't stop it and show you, but we had a bounce there. I'm too busy talking. So let's look at another pair. All right, let's look at another pair. All right, so we're looking at Ethereum US dollar. Basically, you can see here, flat market pretty much. We're looking here, so you get again, you can see how the market follows with Kijun-sen and Tenkan-sen. But let's see this market moving. So nothing happening, but now we get a bullish crossover, but the market's below that, and Kijun-sen is pretty flat. So our bounce has to be on top because we got a bullish crossover. But now we get another crossover with angulation. This is a little bit of divergence with Ichimoku because basically you got a big move with your Tenkan-sen, with your Kijun-sen, but you don't have a big move in the market. All right, and then that's getting ready to see a crossover. You got that angulation. That's false. And then here, I definitely take this TK crossover trade. You know why I take this crossover trade? Because I know at this point I don't have much of a stop loss. I'm not putting much risk on the table. So I would take this trade right there where the candle closed and put a stop loss above this level, at least trading through here, trying to get through that level. But because this is a TK crossover trade that's right next to the market. Usually a TK crossover trade is far from the market a lot of times. That's why I never take them. So that's what I'm telling you guys. Like, let's see if we have a crossover here. Like, this crossover was bearish, and I probably would have, I would have got stopped out here because I would have went to taking a short trade, and then the market goes up on me, and that one wouldn't have worked. This crossover, not too far away, but you can see what I'm talking about. All right, so when you get a crossover, that's what you get. But so let's look at that crossover trade developing also. And then we'll talk about, now see, that crossover trade worked a little bit. And it worked pretty good. That wasn't a bounce trade. That was a crossover trade. So I'm going to get you guys out of here. I know you want to get out of here, but I just want to show you this opportunities, and I'm going to show you Kijun-sen bounce trades. And see, the markets, when it's really strong, it's really hard to even bounce off of anything. Now I'm going to look for a short here, but also there's other opportunities for us here, guys. So it doesn't just have to be your Tenkan-sen, Kijun-sen bounce, but those are some of the main ones you're going to look for, because once you get that trade, you're in a good trade. But we caught this one was a TK crossover trade, see? So it was no bounce opportunity. We look like we could have gotten an opportunity here, but we never really touched. Now we did touch here, so we want to put a short at this point. We're going to put a sell stop there with a stop loss above. Again, Ichimoku tells you to put it there. That's too deep. And then we're going to short this market. At that point, we got a little bit of a trade. Again, if you weren't in this trade, right, if you missed this opportunity that I just showed you, here's another opportunity. So you would have entered right here because you touched, then you dropped, you enter. You'd be kind of in a trade that's not going anywhere yet, but you entered right here, and then now you're making profit. And if you even thought you would have hit this one, you're hitting on all three candles. All right, so then you would have made profit, and that would have been your Tenkan-sen bounce trade. All right, so let's look at other opportunities. Let's look at your Kijun-sen bounce opportunity. It's basically the same trade, but it's just bouncing off of Kijun-sen now. So let's look at one opportunity there, and then we'll end this session. All right, so basically, guys, we're going to look at Kijun-sen bounce trades now, because sometime the market drops into the Tenkan-sen Kijun-sen zone and it bounces off of Kijun-sen here. All right, so we won't start here, but even looking at this, you could see, understand the market here consolidating pretty much, because you could see you're inside this one candle right there. So you're pretty much consolidating. I go to a lower time frame to look at that, and I draw those upper and lower levels. So that's what I would pretty much do there. So let's let this thing move before we really get to looking at it. So let's look at every bounce. There's a bounce on Kijun-sen. All right. Now this is where I would put my entry, because my crossover just developed and was bearish. I will put my entry right there. All right. And a stop loss above this candle here, because I want to be above this fractal. But I could also put it just above the candle that violated, which will give me less risk. All right. And we get some profit there. And we get more profit there. Now we bounced again here. I'm going to enter the market at this point. I missed the aggressive entry because I didn't stop it with a stop loss up here, but I'd like to see the Kumo breakout here, because you got support at this point again. So I'd prefer to see the breakout and I'd be breaking these levels here. All right. Now here was a perfect trade set up off of another trade entry. But again, let's look at this Kijun-sen bounce. And where we took our entry would have been down here. We hit this level. Now I would be really afraid here because we rejected now. We rejected this support level. So let's see if we can get through this level. And again, we bounced off of this level. I would put an entry there. If I didn't put an entry here, I would have put an entry here. But I definitely would want to see it get through the cloud at that point. And I would have been triggered on both of these trades if I took either one. And now you got a crossover that's bullish. Doesn't look good for me, and looks like I would lose this trade. Both of them, if I took either one, I would have lost both of these trade opportunities, as you see. And angulation now, super strong. So we're probably upset that we didn't catch any of this, right? But we could have caught this with a different trade setup. Now we're bouncing on Tenkan-sen, on Kijun-sen. Looks like Tenkan-sen bounced, but you could go Kijun-sen because we dropped that deep. Again, I really wouldn't like to take this entry because it's so deep. Too big for me. All right, so I don't like that one. I don't take now. I like this a little better. I don't take every trade just because, and also we could walk this zone. When you get a big rejection like this, you can walk the zone to get a better entry, which is basically this. I've taught this to you guys before, but we really wanted to enter the market here. All right, on a rejection. When you got a good rejection, you want to enter at the top or here. But then as the market now closed here, it was a deep close. We could wait and let the market go deeper. At this point, we put our entry below here. We put that entry right there. So our entry starts here. Our entry starts right here. But when this candle drops below the wick, our entry now becomes right there. So basically we're going to enter above this candle. That's what we'll be looking at. And we got a bullish engulfing. You could also enter it at that point. So let's hold up here. So a couple things happened here. One time we had the rejection of Tenkan-sen, Kijun-sen right here. And then we would have said our entry is up here. But then we dropped lower to walk this zone. This is a zone of support and resistance. So when we drop into these zones, I'm looking for the market to hold here. All right, I'm looking for this level to hold and the market not violate that point. That means instead of taking the trade up here, I get closer to the bottom of this zone when the market drops here, and I enter down here or up here, all right, at the top of the candle that's violating. So that way I don't have as much risk, all right, and I could take a trade and limit my risk and still have high probability. That's what we want to do. Now also we could have taken this opportunity with a bullish engulfing. Again, it's a little deeper, and I always like to be below the fractal. All right, but if we took this trade opportunity, we took either one of these trade opportunities. All right, we could take a couple opportunities there, and let's see what we have happen. Oh, okay, so now again we rejected this level again with this rejection right here. Another opportunity to enter if you hadn't caught any of these opportunities. I like the flat Kijun-sen. All right, that's support. It's holding support at that point. Another entry here. So if you were patient, you still caught an opportunity here. And we'll put a stop loss below this level. That would be our entry and stop loss. Always shooting for your targets. I haven't talked much about targets. The way I really find my targets is going to be when I'm looking for a target, I'm going to use Fibonacci retracements. My Fibonacci extension tool. And what's going to happen is basically if you come study my course, you'll see that when you go to the advanced Ichimoku, you'll learn about the observation theory, where you see this right here. And then you see that end pattern, which is basically a 1, 2, 3, and then you're shooting for 4, which is going to be a measured move. I always tell traders, when you enter at the 3 level, you shoot for 2 first, and then you shoot for 4. So you're going to shoot for that 2 and then 4. And you'll have those with your Fibonacci extension tool, but you have to have the same levels I have. Now you'll have the 1 level because one of them is a 1-to-1 ratio, which means this leg right here, we're looking for this trade to go that same distance. All right, so let's see what we get here. And I could show you real quick. Let me show you what I'm talking about here. So I drew my Fibonacci retracement extensions here. Basically, we go from point A, B, C, and shooting for D. This is the 1-to-1 ratio level at 121.10. If I take a trade here, 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 or here, where I told you these opportunities that we looked at, so we had an opportunity here, we had an opportunity here and here, because we could have put our entry level at this lower candle level when the market dropped. But when the market dropped into this zone, this zone of the wick, we could have put our entry at the close here, and then if we didn't do that, we had a bullish engulfing. So with the bullish engulfing, we had an entry here, and then we also had an entry at this rejection level, because all of these are bouncing off of support. You're holding support with the Kijun-sen. That's why you have a couple opportunities, because the market's pretty flat. It's not going anywhere. You got a flat Kijun-sen, flat Tenkan-sen, but you're getting opportunities because the market's not rejecting. The market's not violating that level. It's rejecting that level. So in the process, this becomes a 3, which is 1, 2, 3. Your basic 1, 2, 3, 4 setup. Your 1-to-1 ratio, as you could see right here, would be this 121 target. So if we enter the market, let's look at our entry. If we don't get stopped out here, let's take this entry, all of these entries. Let's see what happens. You always have to shoot for 2. So I shoot for the upper level and then the rejection level. So you always have to get through 2, guys. And we got 2, and this is where we want to be careful, because we may not get much more profit because the market may be flat here. So we have to watch. All right, but we get our profit, and we're moving right up to the 2 level. Now we want to shoot for a higher level than that. And we did. Look what happened here. So you hit smack dab on your 1-to-1 ratio. What I like to do at this point, especially when I get a rejection like this, how I'm going to take my profit is this. Basically, I entered here with a stop loss here. Now this stop loss now moves up to this level right here. I've locked in profit. If it's rejecting, then that means you're rejecting this upper level up here, and then the market's going to drop. At this point, I'm giving it an opportunity to go higher. So I'm risking the profit that I made right here, which is right there. Or else if I wanted to, I could have had a 1-to-1 ratio set with profit in this area. Okay. So there's a couple things you could do. And also you could just trade basic support and resistance levels. You got to look to your left to find your entries and so forth. So let's continue. Let's see where the market goes. And then we're going to get out of here. I'm going to get out of here. So remember I told you where I had my stop loss? I'm triggered. I'm out of the market. I made profit. I'm done. Right? So let's just see what happens here. So it looks like you're getting a Tenkan-sen bounce. And the market never violates and triggers. Now, got another opportunity. We rejected. I hate to be this far away on rejections, but this is a good rejection. Remember I talk about walking the zone? You first start off here. Stop loss is below this level. If the market's open here and drops anywhere in here, we can then bring our entry down to this point. But until then, we're just going to keep our entry right there. We're going to shoot for this level up here, because again, this is 1, 2, 3 quite possibly, and 4. I trade level, signal, and trigger. That's why every time you see me hitting a level, then I get a signal with this rejection, and then a trigger right here with the entry. So then this same here, we got the level, we got the signal with the rejection, and the trigger is just the close of this. I mean, a violation, our entry right there, violating that rejection level. That's all that is. So we trade LST all the time, or else we don't take a trade. We have to have level, signal, and trigger, and then we take a trade. So let's go. No entry yet. We didn't get triggered. Now we did. And the market gave us an entry. Got to get past that 2 level. Looks like the market's flattening out. Oh no, we still make it. Okay, so again, I talked about entering at the 2 level. I want to find my target. First level is going to be 2. All right. First level is going to be 2. Look like it rejected, and hopefully you were strong enough to stay in the trade, because you didn't get enough to get out of the trade. I mean, you made profit here, but you wouldn't want to put your stop loss way down here. So you watch that price action and then see if the market's going to stay above Tenkan-sen, Kijun-sen, and then you stay in your trade. Now, what I'm going to do is bring my Fibonacci extension here again, because I want to bounce off of the 1, 2, 3, shooting for 4. So it will be pretty much like this, like our last one was. So we say 1, 2, 3, and then 4, and then I'm out of here. All right, so I think we're pretty much 1-to-1 ratio right there. Looks like it to me, but let's check it. So you could see the 1, 2, 3, and shooting for 4, which would have been 134.84. That would have been our target. So again, we get into the market at the 3 level, because you got 1, 2, 3, and you're going to ask me, how do I know it's 3? Usually we're trading a level. When we're looking at the markets, we're trading corrections. When we're trading corrections, it ends up usually being the 1, 2, 3 if it's going to correct at our level. And corrections happen at support and resistance levels. So the market drops on a correction. We're following the trend. So as it corrects, we try to catch the bottom here, because we're catching the bottom at support of the Kijun-sen, and then we want to trade to the 1-to-1 ratio level. So we want to make profit there. Let's see. Definitely would have been able to, now, since you got such good profit, you entered the market at this point, right? You bring your stop loss from here up to, bring it up to this level now. Or you could even bring it to the lower level right here, because you got a chance to give this the run. I always want to give the market a chance to give me more, and then I want to give it a chance not to take too much away from me. So let's see what happens here. Now what I do here, when I see this, almost the same things that get me in a trade get me out, which would be the price action. So now I just definitely put my stop loss right there and just let the market go. If it's going to go higher, cool. If not, it'll take me out for that profit right there, and pretty much took me out right there. And that would be it. So guys, hopefully this is something that you like. There's more opportunities here, as I showed you before. We have many more opportunities to trade with different trading strategies of Ichimoku. All right, but as I told you, fractals are very important in my trading also. So we like to trade these fractals, and there's a lot of ways to trade them, but we have a specific way that is even the best way to trade them, and I want to show you how to do that. Let me show you. Basically, when you're a member of this website and we have our discussions on Saturday, well, actually we have our Friday discussion with our Friday webinar, and then our Sunday webinar. So Friday is our crypto webinar, where we talk about a bunch of crypto pairs, and then we talk about Sunday our Forex webinar, where we talk about 29 Forex pairs. When we talk about those, we talk about all this stuff I'm showing you now, and I show you each pair, where that trading opportunity is, where to look for, what to look for, and I also show you not just these setups, but the other setups that the market is showing at that point. So you'll see those other setups, and then when those happen, you're able to jump in the market at that point. All right, so we'd go over all these crypto pairs, show you the trading levels, pre-trading levels, where they are, and these sessions usually last a good 2.5 hours at least. And we have these every Friday and every Sunday. Friday crypto, Sunday Forex, and then throughout the week We basically just put the trade setups in, show those to you guys when they develop. But you should be able to see the ones that I'm already showing you from the weekly setup. So those weekly setups, sometimes they come through and sometimes they don't. But I show you and you're able to catch those. So that's why being a member is very beneficial, because we talk about all this stuff and more. You can ask me any questions about any kind of trading style as far as what we do and what you don't understand or know. In those sessions, I devote that time strictly to you, give that all to you. I'll stand there for 5 hours if you need me to. But most of the time, people are quiet, don't talk a lot. They're afraid to talk, I guess. But no, I do have some times when we're very serious in there and a lot of people talking and a lot of questions, and it takes me a while to get through the questions. So let me show you, like when we do these sessions, I record those sessions and I put them right on your members homepage, which I'll show you really quickly, and then I'll get out of here. So this is your members homepage. As soon as you log in, you come to your dashboard and it'll show you this video. This video will play for you, and if you don't see this, the latest videos I put up here. So this was the last video that happened, which was Friday, our Friday session, and it's posted here. You can see it's pretty much this one was 1 hour and 7 minutes. We wanted to get through Friday because it had a lot going on. But then also look, you could also see that it shows you your upcoming events on your site, on your page. So we already had this happen, and then our next thing will be July 14th for our Forex market session. All right, this Forex market session is where you will get the Forex session, and then when you come back to your home page, you'll see the Forex video here. Now if you don't see it, then you just go to your market analysis, hit Forex or crypto or stocks or just your educational videos, and you'll see the videos there instead of right here. But there will always be one video here because I want you to be up to date what's happening with the latest videos that I put out. So my last trade setup will be put right here, and then also on the trade setups level. But I like to put them here and then on the try to put them out to the chat room. So that's what we got going on. Hopefully you want to look it over, become a member. I guarantee that you're going to enjoy it if you do. If you don't, just keep enjoying my YouTube videos and hopefully they help you out. I understand that a lot of members have been a lot of traders have been talking to me and let me know that the YouTube videos do help them out. So I'm glad that I'm helping you out. Doesn't even matter if you didn't become a member. I'm glad I'm helping you out. As a member, I can help you even more because you have access to me and I can be personal with you. All right. But hopefully this helped you out, traders. And until next time, have a great one. God bless. So long.